deals that have investors, where there's a gap in the pricing. But, don't know. Ken, you had a question?
Ronnie, do you know where the January 1, 2011 date came from in terms of having the money spent by then? Is that a fiscal budgetary date, or was that just a idea of the IRS that the construction should be done by then?
Well, the legislation, the program ends on December 30th of 2010. So as of January 2011, the program's over. But how they could interpret that to say all the money had to be actually spent,
Because I think that's a big issue with a number of my bank clients that are looking at ways to make the exchange credit program financeable, and with this it won't be financeable. So I think that might be on at least one side of the ledger the most important issue here.
Right, I think you're right, because it really does eliminate a lot of the interest in permanent lenders. I mean, they're not very interested anyway in getting involved in an exchange deal where there's no investor. So this on top of it, the timelines would be very difficult.
Ken, in the stimulus, when they passed the stimulus bill, there was a lot of discussion about timing on various provisions. I've been dealing in subject matter outside of this area, and we had the same thing, that it was either in some cases January 1, 2010, in some cases January 1, 2011. They're just trying to make a clean break that all stimulus activity is supposed to be spent and take place by those dates. But they were just arbitrary dates based on that.
I think Bob had a question.
Ronnie, do you have any idea why the GO-Zone credits are not included in this?
Why the GO-Zone credits are not included?
Well, they are included in the backhanded sort of, in a very kind way from HUD, I think. They were not allocated under Section 42H, which is where the real credits are awarded. And so using that very literal interpretation of the legislation, which refers specifically to that section, they're saying that those credits just don't fit under that. But they're saying if you put in a de minimis amount of 2009 credits, real credits, that then you can go ahead and partake in the program. But it's just their very literal read of the law.
But it's not exchange. You can exchange those credits.
Right.
But you
You can get TCAP money.
Right.
That's right. You cannot exchange those credits at all.
But I don't think that was anything explicitly intended. I think it's just a function of the way they drafted in this section there.
Yeah, there was a lot going on
Nobody
when...
caught it in time to really be able to address it in the atmosphere.
Yeah. Language is never written well enough. You know, there certainly was a lot else going on, and we are fortunate to get things half as clear as they are. Oops. Okay. All right, so on the TCAP funds, again, this is administered by HUD and not by Treasury, so you've got the two different agencies. They're trying to work together to some extent, so you'll see that a few of the things, legislation actually makes them work together, but not very many in the end. It was $2.25 billion nationwide. We already, HUD, immediately after legislation was passed, they got out the amounts for each state based on the 2008 home formula for states and local jurisdictions. So that's been out there for a while for agencies to know. The TCAP funds are available to agencies until September 30th, 2011. I don't know where that date came from. I think it might be a typo in the legislation because it doesn't match with any of the others. I was looking at it again this morning going, that doesn't make any sense, but maybe it does and someone else can explain it to me. But it doesn't fit the other deadlines because it's 2011 and not 12. It's apportioned amongst the state agency based on the home formula. It's distributed competitively according to the QAP. The guidelines say they don't expect you to change your QAP for it, but then they go on to say that one of the priorities that is in the legislation that does have to be in your QAP is the deals that will be done within 3 years of the legislation having been passed. So, you know, I guess you do have to do something. So there's a little confusion there, but in any case, most states are revising their QAPs in any case. It's distributed to projects that have received or receive simultaneously an award of credits. And you have to have a current allocation of credits. This was a sort of a clarification in the guidelines that is a little bit troubling, but sort of makes sense when you think about it. You have to have an allocation of credits in order to get this TCAP money. You can't just get TCAP money if you don't have any credits in the deal. And it requires additional funding. So this is where the language comes in, and it says, and these funds are where you need additional funds to complete the project. So that's where I'm getting this idea that maybe they really don't look at this as funding the entire project. But it's available only to projects that have been awarded tax credits in fiscal years 07, 8, and 9. Remember, the federal fiscal year is different. It's October 1st to September 30th. So it goes back to 06, October 1st of 06, and it goes through September 30th of this year. Priority is given to those that can complete within 3 years, as I said. That's been in the legislation, and it wasn't paid much attention to, I don't think, by most, because 3 years is sort of a long time, but it is from the enactment of the legislation, and you do have to state it as your main priority, is what it says. So these funds can be awarded as loans or grants, and the grants do not reduce eligible basis. I don't know about income in that case. I don't know if you... Still a question, whether it's federally taxable income or not.
I think you've said it's not going to be federally taxable in the webinar they did.
Okay.
But there's nothing in the law that says that.
Okay, and nothing in the guidelines yet. So they'll probably come out, they're going to be doing Q&As, and they're asking for Qs so that they can give you some As that you maybe like and maybe not. I guess especially give them the Q and the A, and then see if they agree with it. And sort of like the IRS, if you don't, private letter rulings, if you don't like it, just retract it. Pretend you've never asked the question. The agencies have to commit not less than 75% of their funds by February 17th of 2010, which is a year after enactment of the bill, of the legislation. And owners, every single owner, and not sort of a cumulative average, but every single owner has to expend not less than 75% of their funds by February 17th, 2011, 2 years from enactment, and 100% by February 17th of 2012. See, that's why I don't understand why the third bullet makes any sense. But there is a national pool concept in this one, unlike the exchange, where the credits after 3 years, whatever's not used, will go back to HUD, and they will determine on a pro rata basis, like the national pool is now with the tax credits. For agencies that have used all of their credits, or all of their TCAP funds, they will disseminate these funds out for them to use. And then the agencies can take back and reallocate the funds that aren't expended by that 2-year developer requirement, or any time not past the 3 years, and they can't do that. It goes to the national pool. But before then, if the developers aren't meeting their deadlines, that they are able to recapture those credits and reuse them. Section 42 is just like the exchange program, 1602 program. Limitations, the rents and incomes and use restrictions of Section 42 apply. Agencies have to do asset management, the same thing as with the exchange program. They can charge fees for asset management, but again, they can't use the actual TCAP funds for that. And the HUD secretary has actually waived all of the home requirements and regulations except for NEPA, which I was really thrilled to see, except I don't really know what the home regs and requirements are, because in addition to that, apparently Davis-Bacon, Fair Housing, and a whole bunch of others that they list are not part of the home regulations, but must be part of the whole federal HUD requirements whenever you have HUD funds. So whatever those home regulations and requirements are, you don't have to do those except for NEPA. But then you do have to do Davis-Bacon, and you do have to do NEPA and the others. This was a huge surprise. These funds can only be used for eligible basis items. So you can't use it for land, you can't use it for reserves, although some state wanted to use it for reserves for their old projects, which may be where this whole idea came from about, well, we don't want that kind of abuse. But you can't use it, so anything you normally could not use tax credits, or you can't get tax credits for the non-basis, eligible basis items, you cannot use these funds for that. So there's going to have to be tracing and accounting of that, and you're going to have to account for it to HUD.